Okay. Thank you for coming. I was just literally about to start. So today, from the second video that I produced today, there was an issue because I had played music and people couldn't understand majorly what I was doing. Okay, so as you can see, this is the chart. As you can see, this is the chart. This is what's happening. We're still in profits for now. We're still learning in profits. We're still in profits, as you can see. I said the take profit was here, but we're still in profits. I had already taken out my profits from there, so we're still in profits. So I didn't talk more majorly about what the analysis. So I did an video on the analysis. Let me do an overview the analysis and the analyzed form. So from this point, you can see the market there was a supply zone from this point. So we had a supply from this point, and the market created a higher high. So when we had a supply zone from this point, it means that the market was going downwards. So the market went down. Later it came, and after creating a higher low, it went down and created a fair value gap. So after creating that fair value gap, it created a lower low. That was on Tuesday. This was on last week on Friday, created the other week, previous week, created on 8th supply zone. Then it came and created a fair value gap, I think on Monday. Then on Tuesday, it's higher low. Then on Thursday, it was looking for the lower low. It created a lower equal lower low, created an equal lower low. Then later it came now on Monday, it opened with a lower low, the exact lower low. So the market was looking for its higher low, which was here. It came and created this higher low, which was here. This was a higher low. That was a higher low. It came and created this higher low. So after creating that higher low, after creating the that was the higher low. After creating now the higher low, there was this candle. This was the candle that literally opened the day. Okay, so these were the candles that opened the day. So we marked we marked its high and the low majorly. Marked the high and the low. Let me try to put it here. Okay. So we majorly marked the it. So we literally marked we marked the high of that candle, the low of that candle, and the high, the low and the high. So after marking the low and the high, there is one key area that you need to know. So this acts as our breaking point where the market will now come break and close inside. If it breaks outside the zone and closes outside, you take for buy position. If it breaks inside and closes, you take the sell position. But now the issue around it that happens, let me open it so you can see it widely. It's correctly. Okay. So as you can see, when it broke outside, it broke, then it came back, then it broke inside, then it closed inside. So it initiated for us to know that we were looking for sell position. That's why I had put these entry points from here. I had put a stop loss which was upside, this stop loss was high, then the entry point, then the take profit. So from this analysis, as you can see from this analysis, majorly this analysis done, but now there is one key area that we never fight in the market, that is now called the trend of the market. The trend, you should never fight the trend of the market. So majorly the trend was a downward trend. It means the trend was good. Many people in the morning took buy positions because they were trading support and resistance. As you can see, this was a resistance, then this was a support zone, this was a support, this is a resistance zone. So most of them took their buy positions from here. When it closed, it broke the resistance, then they took buy positions, they scalped for buy positions up to here, where they knew the market will come down. So they were not ready to wait for the market to go down and take the sell positions. So that's for us who trade the long, we trade like for the 100 pips and all that, we take long trades, you have to wait for you to be good, profitable. So as you can see, the market came up, but since this was a downtrend, literally it couldn't go above it. It pulled down, come back to the zone, retest the zone. When it wanted to retest the zone, it was pushed down, breaking that zone. After breaking that zone, it initiated showing that it was a downward trend, so the market was going down. So you can see, so for now it's creating equal low, equal low, which is like a double bottom. Some people call it a double bottom. Later it will move upside, see, but we shall wait tomorrow and see what happens. So that's majorly according to the analysis that I have drawn here. So one key area, we use also the Fibonacci to know where we can get our entries. As for these, as you can see, there are entries for some people could have taken their sell entries from here. This was I usually use these 7 as a sniper entries. Like if you could have done from this, it created, and also it hit almost the 78%, 61%. That's always a sniper entry. You get sniper entries from here. Here mostly you get sniper entry. And if you could have all those sniper, the evening star, yeah, then it came and created, I think, the margin candlestick, then push down. But literally this was a pattern. This was some pattern which was created here. It created a bullish engulfing. Later it came and created a higher doji, which came and created a hammer, came down, created, I think this was another pattern which was formed here, show that the sellers were still high, pushing the price down. They wanted the price to go down, literally down. So that's it. So majorly, this is one of the analysis that usually you can use, and with this analysis, it's simple, straightforward, and clear, and anyone can be able to just trade the markets fully without even struggling if you just use this analysis. You don't require a lot, but the biasness of the market majorly I prefer analyzing the higher time frames because it gives me a good entry in the lower time. As you can see for this, if I could have moved to 30 minutes, give an example of the 30 minutes time frame. If I could have moved, we have just seen. Sorry about that. Okay, as you can see in the 30 minutes time frame, you can see the market broke to the upside, then it came, it tested, broke inside the region here, then it closed inside the region. So here was our sell entry point. As you can see, it is just near the crossing of the moving average, just inside the crossing of the moving average, just indicating that we should start taking our sell position. Yes, we took our sell position from here. Yes, it was, but since it broke inside, then went down, this showed that there are more sellers now. It created this candlestick pattern, then it created a change of character to show that now the trend now is changing from bullish to bearish. Change bullish to bearish, then you take your sell position from there. If you move to the 15 minutes, sorry I didn't do for the, so you can see in the 15 minutes is now clear. It created a change of character, break of structure, then another break of structure. After just breaking the zone, created a break of structure. So this was just the exact point entering into the market. You see, it has already now created a break of structure. It means the market is still pushing downward for sell position, but this sell is too low. It means the sell position is, the price has already gone, so you'll be running with the price, yet it will be too low for you to buy. You either buy low, you sell high. That's one key. You see, it's taking out the liquidity from the downward. If you now move to the 5 minutes, where now you can take your entries, and even if you want to see, I'm doing it. As you can see from here, created a break of structure, then it came and created another break of structure inside here. So majorly after creating the break of structure, majorly came, retested, started pulling the market down. So you can see, started pulling the market down. The people have taken your positions either as we took either after here, after the first break of structure, then here, then like you can see, that's some good bits. That's some good fucking bits. So if we come to the 1 minute, those who take positions in 1 minute, as you can see, the market is having some change of character. It's looking for a bullish state. So took the change of character, the trend coming. So if you can calculate here, that was 156 pips, very high, very many pips to get good profits. So you can see. You can see very good profits. Really take this profit from all those positions. So just change of character, break of structure, change of character, break of structure. That's now the market analysis. Now analyze the market through this. As you can see, it's creating a change of character, break of structure. The format with the break of structure is already collapsed. It's time now for the, but now the issue is the 4 hours time frame. Come to the 4 hour time frame, gives you now a vivid view. Gives you a clear indication of what's happening in the market. So as you can see, that's it. That's how you do analyze these markets, and you just take your good trades inside the market. The key essential thing that people should always understand is being patient. Patience is the greatest key in trading. Without patience, then you can never succeed in trading, because you need literally a lot of patience for you to literally make money. That's one key thing that people should always grasp. Trading. Majorly the patience. Patience is always a virtue. See, you're trading the market. So when you take your patience, literally, as you can see, when you just be patient, then things always go on your side. You never force for things for you to get them. You just let things go on your side, then you take your good trades. So you literally be patient, take your trades from the position that you are, and wait for the market to play out just freely without you struggling to being in a hard. You will know the good entry. So without you struggling, without you having a lot of anxieties and all that, then you take your trade from that position and you are good to go. So majorly we'll wait for tomorrow as we prepare and wait and see how the market reacts. But majorly tomorrow, as I've seen tomorrow, today the market was not that volatile. We were trading under less volatile market. As you can see for today, the market is not that volatile. There was no news. As you can see, Monday trade balance, the market is in volatile, that volatile. For today, PPI news, which is not volatile. Tomorrow we have CPI news. We have Indian CPI. US dollar will be affected. Euro will also be affected. And then as you can see, in terms of the central bank ratings, it has almost like remained like the same, hasn't changed over time. So for Tuesday, from 3:30, which is the New York time zone, there will be a lot of volume the market. So the market may be choppy over the day, but after 3:30, will be a lot of volume which will come into the market. So I'll literally prefer someone just to wait and trade carefully, majorly when the market is so volatile. So on Wednesday also there will be also some volume which will come in at 5, but I think someone can trade in the morning and it will be okay. Wednesday. On Thursday also there will be some volume which will come through from the London session. There will be some volume in the London session on Thursday. Then also the New York time, and on Friday we shall close also with the Powell speaking the evening at 5, meaning there'll be volume in the evening. A lot of volume will happen in the evening because I think Powell will talk about, I think he'll be talking about mostly the interest rates, due to speak about the economy, outlook and monetary policy framework. Policy. Okay, so we should be waiting for that. Waiting majorly for that day. It will be okay. It will be okay. Okay. That's it. So we shall wait and see about it, and I know it will be okay. So majorly that's it. What's happening? As you can see, the trade already in profits. We are in good profits for now. That will be a good closure for the day. I know it will hit our TP from that point, but majorly I know is a good trend for us. Thank you for coming. Thank you for joining. Thank you so much. I think I've literally clarified major on this part, but I keep on doing some good analysis on these trends so that it can be easier for you to understand and easier for you to analyze. So for that, I think we shall I shall retrieve for tomorrow, then we'll see what good plans for us tomorrow. But tomorrow I know there'll be good profits for us also, but we shall be keen to analyze the market. So majorly I think I'll drop the Telegram link